All right, guys, welcome back to the channel. Bitcoin's just hit another new all-time high, $106,000, breaking past 104. We've had the highest daily close in history, the highest weekly close in history, and at the moment, we're set to be closing at the highest monthly close in history, but that's still 2 weeks away. However, the pattern that we have been following now for several weeks continues to show that this is what happens before a parabolic move. And the last time this happened, Bitcoin did 200% in approximately 7 months. We have that coming up in terms of the analysis. How high can Bitcoin go with this particular pump and this pattern? Plus more on altcoins and altcoin season. How long should you be waiting for this particular period? And of course, no update is complete without talking about some sort of profit-taking warning, if I could label it that, just so that we're all leaving this show with a little bit of something in our back pockets. It's your home of macro cycle analysis with me, Jason Pizzino. I'm going to cover Bitcoin, cryptos, and a little on the stock markets and real estate today, because I think the spotlight is being taken by Bitcoin as, of course, it hits another new all-time high. And a little mention with Christmas coming up, we have the TIA premium sale. Link in the top of the video description. Sign up with your name, email address, and you'll receive those emails as they come out at the end of this week. One final warning, I do not have an Instagram. It was suspended by Meta, so don't fall for scammers over on Instagram. And I only have one X account, which you can follow and find in the video description. Just need to talk about the scammers now as Bitcoin hits new all-time high prices. Things get a little bit crazy out there. Okay, the agenda for today, Bitcoin short and long-term analysis. As I mentioned, the Christmas sale, stock markets, real estate cycle, then dive deep into the cryptocurrencies. To begin our headspace for today's analysis, this was a quote that I popped up in the most recent video, looking at preparing for corrections and anticipating corrections. So we're not trying to prepare or get involved in trading the corrections. We just want to trade with the trend, or at least that's my strategy here. That's my strategy, and my investment plan is to trade with the trend. I'm not trying to pick every top and short the market. That I will leave for the fools in the game. Trying to short all the tops, I think, is a really bad idea, and all-time high territory proves that that strategy does not work. So this was a quote that we looked at last week. Of course, there are going to be corrections along the way, but the way I look at it and the way I guess present it to you guys is that when they come, provided you know that you're in a macro bull market, just accept that the corrections will be there. I'm not trying to prepare or anticipate them in order to be the next Michael Burry and short the market all the way down. Remember, he was trying to be short for 2 years. So if you're not trading with other people's money, you're probably going to get absolutely destroyed. So that leads us over to some of the let's look at the headlines in the news for Bitcoin, and then the macro cycle here with the traditional markets. Trump considers Bitcoin for national reserve. Updated an hour ago here on X. Trump, obviously president-elect, considering, that's the word here, an executive order to establish a strategic Bitcoin reserve. Yes, a few weeks, maybe a month or so ago, I thought this was absolutely crazy. I did not think there was a chance that the US would consider something like that. I underestimated Trump and the presidency and the way he thinks about the market. I stopped short of calling it something else. But nonetheless, that's the point of riding the trend. Even if you're wrong in your decisions and what you think is going on out there, the chart is the best place to fall back on and continue to ride that trend. I'm still absolutely long Bitcoin and my crypto portfolio, as our members know. And the whole idea is just to keep riding that trend as long as it is willing to give it to you. Remember, the trend is your friend until the end. Now, we also saw the other day, a week ago, Amazon shareholders pushing for a Bitcoin treasury. I reckon that this could potentially push a lot more of these companies. I think we even saw Microsoft or IBM talk about it, but reject it. But they might come back into that space, especially if they see that the US government is giving it the go-ahead, or even maybe a thought around it. And of course, this is all part of the winner's curse phase. For some, they see how this works. For others, maybe you're just seeing the 18-year cycle for the first time. Absolutely okay. It did take me a little bit to really grasp it when I first found out about it in 2012 at the bottom of the market. And now I've been following it for 12 years, and it has not missed a beat in this cycle. What this is about is the 18-year real estate and economic cycle. and you are finding yourself in this final peak. So there are a lot of gains to be had. I've never said otherwise. Market's up, bull market's on, pump is on across the markets. Within that, you're going to see corrections, and the stock market is looking like it's putting in those corrections at the moment. Short or big, we'll get to that in a second. But after this crazy period, this is a crazy period. This is a time where you see crazy stuff like this. Some digital thing that was made up 15 years ago. Now, the biggest economy in the world is considering, so it's not confirmed yet, but it's considering, which is phenomenal in the last 15 years, to take it on as a strategic reserve. And that's what, I guess, these are the sort of crazy things we see at the tops of markets. Tops can last a lot longer. And I go back to this quote here. We're not trying to anticipate the top, which means, a correction. You're not trying to see this peak and then it absolutely collapse, but it's all signs within a longer term peak. That's how long these are. We're looking at roughly 2 years into this peak because the market has already been going for roughly 12 years now. Stock market from 2009 has obviously been 15 years, but for house prices and the US economy, US house prices and US economy, roughly around that 2011, 2012 is where they really saw that low, that bottom, and then it's been up for 12 years since that point. So that's why there's about 2 years into this, and we're probably about a year into it now. There might only be about 12, 18-ish months left. So today we're looking at the swing chart on a slightly longer term view here, just checking out what the trend is up to in a broader time frame, so a longer term time frame here. And you can still see we've got higher highs, higher lows forming. And for the S&P 500, even if there is a correction, because you can see the movement here has gotten rather small, any corrections I think are still healthy all the way back to that August low. The August low we had at around 5,100 points. That doesn't mean that the market is going to go there. It just means that anything down to that level, it could be to 58, could be to 56, could be to 54, anything to that above that level is still a healthy correction for this final stage, a sort of winner's curse phase. For the NASDAQ, however, that did hit a new all-time high on the back of Tesla hitting another new all-time high. So in terms of the tech stocks, they're still doing relatively well. The rest of the top 7 had a couple of days down, but they'd also hit new all-time highs last week. So you just started to see a little bit of a weakening there for the NASDAQ towards the end of the week. However, it still was another new all-time high price, new all-time high daily closes last week, and then new all-time high weekly close as well. So as I said in the intro, shorting markets as they hit new all-time highs is not the wisest decision based on the data, based on what you can see from the past and how it breaks into new all-time highs. You are going to see corrections, but the majority of the time it's going to be going up. So it's just easier to ride with the trend. Why make the game that's already difficult more difficult for yourself trying to be a hero and short the markets? I hope that's not you guys out there. The S&P and NASDAQ are turning. However, the rest of the markets around the globe have already begun their turn. So I'm looking at this as a bit of a slowdown within the overall uptrend. You can see the top 50 in Europe had a bit of a slowdown last week. Canada was also red last week after putting in a new all-time high. Australia has had a down week last week, but also put in a new all-time high the week before last. And in terms of Europe, you've got Germany putting in a new all-time high last week, but basically a small correction that formed at the end of the week. In terms of China and Asia, it's also pushed to higher prices, but then has closed under the 50%. So the key level here for China is to watch for any sort of movement underneath 12,800. For now, it's pretty much in a trading range between that 13K and about 14,000 points. The Hang Seng doing something similar, except it's at a higher price point in terms of percentage there. And then the Nifty in India had a week up when everything else was basically coming down. They've had their significant correction to the 50%, and the emerging markets are, well, let's say they're emerging again. For the commodities, the US dollar also had a strong close to last week on some rising volume here. So it's looks like it's attempting to try and take out 107. That's been the key resistance level now for the last 2 years. And then above that point, you're at 108. Once or if the US dollar can get past those levels, we'll then look to any other significant resistance points should this rally continue. So that's what we got on the US dollar. As for the rest of the commodities, with that strength in the US dollar, you're also seeing oil up at 71, so a stronger close to last week, yet it hasn't broken any significant levels to the upside yet. $80 is going to be a key price point as it's the 50% level. And for gold, it also had a strong week last week, hitting a new fresh price, but it closed lower. So it went underneath the 50% at $2,671. So something to watch coming into this particular week leading into Christmas. So going through all of those charts, we can see that the markets are slowing down at this point. However, it might not be such a surprise as, of course, there's Christmas next week and New Year's the week after that. So we're going to have to see where these markets land over the coming weeks and whether that is going to be that key turning point for them if it is running into a low. I would much rather see a low begin to form over the coming weeks, which then could lead to a nice bounce in January and that move higher. Because at least from what I've heard from a lot of people is that they're expecting some sort of peak in January and then a big sell-off at the presidential inauguration. But if that happens sooner, then it might catch some people off guard. Just something that I'm watching. I don't know if it's going to happen. And the main thing I'm interested in is, well, what are the charts going to tell me leading into those timeframes? So following that, we have Bitcoin. Now, this was that warning chart that I looked at for weeks now. Obviously, this pattern had been put in, and this parabolic move that we've seen each time when it comes to altcoins and Bitcoin using USDT dominance, so USDT dominance chart. But we'll start with the Bitcoin weekly chart. We saw the highest weekly close in history. We've seen the highest daily closes in history. Yesterday closed at 104,400, and over the weekend and end of last week, we're getting highest daily closes after highest daily closes. Now, the volume is dropping off, but that's not uncharacteristic of this time of year. If we take a look back at December of last year, that's this period here, even the volume through this, the week before Christmas and the week of Christmas can be quite low. You can see the blue line in the background is the average, and it starts to drop off until you get back into January, and then January likes to get going again. People come back from holidays and they start to trade again. Now, there were a couple of big flush outs that we saw last year. They happened a little bit later in terms of the dates, but it's mostly those events that had occurred. You saw a lot of pump up and then a flush out, another flush out, and then the market rolled over, hit that low, and it started to climb back. And this time, we've seen a couple of flush outs already. You got the first one here. The two significant ones with the highest liquidities were the 5th of December and then the 9th of December. This one here was the biggest one, even though it's a smaller bar than the 5th. $1.7 billion of liquidations just in that 24-hour period alone. And this first one here on the 5th was around $1 billion. So it was basically the biggest one in history at that point, and then basically eclipsed 4 days later by 70% higher than the previous one. And so what we've seen in terms of the price has been enough of the liquidations getting flushed out to allow the price to go higher, at least in the short term. And the other thing that has shown the price going up from here were these signals that we looked at again in those previous videos. You go back to the Max Payne and don't ignore this signal videos. The Bitcoin chart, this bar showed that we were looking for a reversal, at least a short-term reversal. That happened, so it was confirmed. And we saw the same signal here looking for a reversal. That happened. And going back, we saw this signal here looking for a reversal. It didn't get a reversal, but it paused the market. You didn't see a massive pump up after. And if you remember back at the 10th and 11th, you're going to see big pumps. So what does that mean to the price now? Well, we're losing a little bit of volume here. Ideally for this week, even though we're leading into Christmas, we'll need to see some of the volume come back to close higher and continue to close above any of those previous swing tops in order to confirm the strength and the market go higher. On the weekly chart, so the longer term outlook here, we've seen the two pumps, the 4 grind and then the 2 pumps is what we are currently in at the moment. What the hell is that? Well, we've got 2 significant weeks. You can see these here. Then you got 1, 2, 3, 4, basically the grind. They were going higher, but in terms of, well, compared them to the previous 2 weeks, they're essentially a grind. And then we had another 2 weeks of pump out to the upside. So what do I think this will happen again? Well, I don't know if it's going to happen again, but so far it's basically been very, very similar to what happened on the breakout earlier. Why does it happen like that? I think it's got something to do with human emotion and how people trade the markets. Those who are late to the game, they sort of come in during this last 4 weeks that we've seen. They get bored, and it's almost like clockwork. Once they're bored and the liquidations happen, well, it's time for the market to pump, and that's essentially what it did last time, and it's done it many times before, as we've gone through in previous videos. So the percentages now to the upside, something around 120 grand would be similar to what happened last time, just looking at that 20%. Here are those 2 weeks. First week there, or the 1-2 of the last pump. So you got 2 pump, 4 grind, 2 pump. That's around 22% to the upside. You can see these first couple of weeks here that got you to the first pump when no one's sort of interested or they're trying to short the market. Those were around 33%. And then basically that grind was your 4 weeks sideways. Now we've seen the 2 pump weeks here. So roughly 40-ish%, which then led into the grind. And if we measure again for the 20% that these last 2 weeks had, you can go up all the way to around $124,000, which isn't that far from where we are now at 106, but it doesn't mean that it has to get there. You know, it's still 18K away. It's still a solid 17, 18% from the current price, but just something that I'm watching in terms of a similar pattern to what happened back in November, December of 2023. Before then, there was another 8-week sideways grind correction, and then you started to go again. So I'm just asking myself the question, leaving it there on the chart in case something similar like that happens. I want to be prepared for it. Well, then if we do get these next couple of weeks to the upside over this Christmas period, which is typically a bit quiet, well, then I'll be watching for some sort of grinding pattern that comes after that, because typically we'll see the market move for 10 or 20% of the time, and then the other 80, 90% of the time, it's basically deciding where it wants to go next. This chart and the pattern that Bitcoin had done was something that I posted over on X days ago, weeks ago, and even coming up to a couple of months ago, back in September and October, when those higher lows began to form. So the links for X are in my video description. I strongly suggest just using or going and follow it so that you don't get caught out with other scammers. I'm not going to be able to reply to everyone to tell them that's a scam account, because obviously heaps of people will message in saying, is this a scam, that a scam? They're going to be a scam. I'm not going to DM you, whether it's on X or Instagram. As I said in the intro, I don't even have an Instagram anymore. Meta blocked my account, and for now, I don't even care to use it. There's so much else going on with YouTube and X. So don't talk to anyone on Instagram that claims to be me or anything related to my accounts over there until I tell you otherwise in the video description. So that's a look at a BTC and that pump. USDT dominance is also a pretty interesting chart at the moment, as it's been grinding around 2 key levels. 4.2%. It's come up and tested those a couple of times, and as I'm filming this, it's trying to again break the 3.8% low here. So if that is to break down, we need to see closes underneath 3.8 and this low here. At least that's what I'm waiting for, underneath 3.7%. The worry that I have and the little warning that I've got here when it comes to altcoin season rotation is that last time, even at the tops here in March of 2024, but when I say last time, I'm looking at 2021 when we had the Bitcoin pump up to $65,000. Through that period, you still saw altcoins move, as represented by the chart in the background here in the white. However, the USDT dominance was basically grinding sideways, which shows that you're seeing a rotation into one narrative of altcoins and then possibly the other narrative, but also from Bitcoin into some of those altcoins. And it wasn't like everything was popping off. And the clear example of how everything wasn't popping off is through that period, you didn't see DeFi pump. Yeah, it went up, but if you're looking for those phenomenal gains, it wasn't to be in DeFi, because DeFi had their turn in basically the second half of 2020. So through that period, you were just seeing a lot of rotation between different narratives, one popping off than the next. It wasn't everything going at once. And then you also saw, at least to the peak of it through from February into April, basically Bitcoin grinding to a halt. It only ran from like sort of 50, 55 up to $65,000. And that's where you got this particular pattern on USDT dominance. It was trying to break down, but it just wasn't happening. And that basically took 5 months of all of this rotation and excitement and money going in and out and people taking profits, yet people thinking the altcoin season was still going to last forever until it didn't, and basically a huge collapse. So the white line in the background was the collapse of the market, and the bar chart in the foreground here, so the colors, that is money flowing all the way back into USDT. So from 2.2%, got a peak there of around 5%. So a lot of money came all the way back into it, obviously scared with the crash. So I've called it a warning. I don't want to like take the edge off people's excitement as Bitcoin breaks to new high prices. And we're also seeing SUI getting very close to a new all-time high as well, nearly around that $5 mark. I'll get to that in a second. But just finishing up on the USDT dominance here, I guess what people are really looking for when it comes to their altcoin season is a big move to the upside, like a nice, clear, straight, almost, white line to the upside, which then is also represented from the USDT dominance coming down in a relatively straight fashion. So if you're sort of sitting around here now wondering when is that alt season going to happen, just take a look at the charts, and some, maybe half of it, maybe the majority of it, maybe all of it, because we don't know. Remember, no one knows what's on this black side of the screen. A lot of people will claim to know exactly what happens. I have no idea exactly what is going to happen. I just play the game as I see it. I guess where I'm going with that is people want to see this sort of straight line happen, but you can see on the chart that some of it has already happened. So whether we get this big breakdown from here and it just goes bananas, January, February, or March, I don't know. But if it is just going to grind out here like it's done in March of 2024, and like you've seen patterns in the past, then that could show you that money's just sort of rotating between different narratives. And if you're switching between different narratives with your altcoins, you could miss one, and then you rush and put your money into the next narrative, which is already pumped, and then you take it again, try to put it into something else, and while you're doing that, they're going down, down, down. You're waiting for that next narrative. So that is pretty much the problem that I've seen every single cycle, people anticipating or trying to get on board a train that's already left, and then they miss out making money within the bull market. Honestly, I don't know how to sugarcoat that. If I did, I'd probably have a much bigger YouTube channel, more views on my channels, and more degenerates looking for the next top 10 altcoin tier list or something like that. But I guess that's just me. We're not looking to sugarcoat it. I'm just trying to read it how I see it and then invest my money wisely. Sentiment is up again, of course, 83. And what we know from past experiences is that it can remain elevated for a considerable amount of time. And that time frame is roughly around 2 to 4 months. So we take a reading back to the greed here in October. Well, that takes us up to 2 months, provided we don't drop, or the sentiment doesn't drop into neutral or below that. Well, maybe this continues on for that sort of 3 or 4 month period that takes us out into January. Now, with the search terms, search volumes, they are obviously up. So this is a good sign for more to come, especially if it's breaking past previous search volume levels like we saw on the 10th of December. So this is a bit of a short-term outlook here. Provided this can remain above those levels, then we're seeing more search volume and more interest into it in the short term to hopefully get those late entrants back in and keep pushing those prices higher. That continues to follow on with my thoughts here with this sort of 2 pump, 4 grind, 2 pump. The way this would be invalidated, it's a good point to note, is if you saw some closes back underneath these tops. You can see back at the previous one, once this broke out, you didn't get closes back into that level. So here, if you saw the weekly close back under around 104, and last week was 105, that would be a bit of a warning to say that this is looking a little bit weak. Maybe all these people who are coming in later are going to get wrecked again, and you'll start to see the exchange volume pick up if you get those liquidations that come back here, and the longs would be liquidated, and then this would start to balance out again. So that's how I see all of it playing out. What we've also seen is a drop off in the exchange volume for now, back down to 100 billion. And the areas that I'd be concerned with is a drop back down to around sort of below 80 to 90 billion. So we're not there yet, but it's getting a little bit close. The true altcoin market cap has had a nice flush out, good strong close to the week after it did drop down a fair amount, all the way down to 740 odd billion. These were the couple of areas that I had been pointing out for the last couple of weeks, thinking that that's where we are potentially sitting. You saw the market run up. It's had a flush out. It started to run up again rather slowly into March, a flush out, and then basically got going towards April and that peak in May, because you had a significant amount of flush outs here and you could still see the trend was up. You weren't getting too many significant corrections from that point. Only until from May in 2021, where you had those significant corrections to the downside, is where it lasted for a lot longer than the typical 1 or 2 weeks leading into that particular peak. Now, I've said particular a few too many times, so let's move on to the next chart. And this one is particularly interesting because it's total 3 divided by Bitcoin, just looking at altcoin seasons. So the time frames here are relatively healthy, 20 weeks to the upside from this low to high. So all I'm looking at here is the market cap outpacing Bitcoin's market cap. So the total altcoin market cap outpacing BTC's market cap. And from last cycle in 2020 to 2021, you had about a 20-week period of just straight up. So like that big mega altcoin season. Now you can see here that we might be at the beginnings of another one of those, which is why, for me at least, I remind myself, it's far more money has been lost by investors preparing for corrections or trying to anticipate corrections than lost in the corrections themselves. So again, I'm not trying to anticipate any of these sorts of corrections coming up. I just want to keep riding the trend until the end. But we are getting closer to those points compared to where we have come from. It could last another 2-3 months, but where we've come from, there's the Bitcoin chart, we've come from 2 years of the market going up. So 2 or 3 months is a relatively, in my books, the way I trade my timeframes, is a relatively short period of time compared to the last 2 years that I've endured ups and downs. And now, my Bitcoin is up nearly 600%. So it's just something to keep in mind with different traders, investors, what time frames they're actually on. I'm on a longer term time frame, but I'm also interested in the short term to see whether we do get these little pullbacks. So the most hopium and bullish part I can give you out of this particular chart is that the move out of the low in November, we're on a weekly chart, remember, has been the biggest move that we've seen in the entire way down. That, at the moment, is an overbalance in price, and now we're looking for an overbalance in time. And you know how amazingly well overbalances in time and price have worked. We had them on the out of the low in 2022. That was for Bitcoin to tell us that the market was in a bull market, when the majority of people were telling everyone that it was a recession, and possibly why some of you weren't interested in the market back then. Then we had the overbalance in price and time on a shorter term time frame in October here, which told us that we were coming out of this particular low and got us in on the trend. And there was the video one. You can go back on the channel and see that. So that's an interesting point that I'm watching now for another overbalance in time and price. It hasn't happened yet, but that move up in terms of price is sparking my interest to keep watching this particular chart to see if we end up with the overbalance in time and a move to the upside, which I'll cover in future videos. But this one's going on long enough, so I just want to quickly cover Sol and Sui. Sol BTC is on the breakdown against BTC, and the 50% level is the key level it must get back above in order to regain its, queen status for this bull market, this altcoin market as well. The 50% versus BTC is at 0.0026, and more closes above that level could keep us going higher. Because if it fails at 50%, it could end up basically underperforming for this next stage of the cycle. So something that I'm very interested in watching, obviously being a Sol holder as well. And then you can see these lows back here, the rather not zone. It's not going to be the end of the world, but ideally for stronger growth, you could see it move higher. The other reason that it's not the end of the world is because you can see from last cycle, it went bananas to the downside, 80%, but then rocketed up and outpaced Bitcoin. So I think that's sort of where a lot of people are sitting on this, thinking it could continue to outpace BTC. And the last one is Sui. Literally, as I was filming, putting a new all-time high by 2 cents. Hasn't hit the $5 mark yet, but it's put in a new all-time high. As I said in the previous video, these time frames are an important one to watch when it comes to the correction and then into a new all-time high, as you typically see these shorten and the move to the upside sort of explode, but then that leads to the reverse happening and possible, big explosion to the upside. But you're going to have to see a significant correction in order to maintain the foundation for a strong move later in the cycle. So another massive day, another massive week for BTC. They're not going to give us any rest leading into Christmas. Of course, hitting a new all-time high, still sitting at 105. There is the Christmas special sale on TIA Premium coming up. Link in the top of that video description. Just put your name and email address and you'll be first notified around that. Thanks again, guys. I'll see you at the next video. Take care and peace out.